All right, let's talk about sending money out of India. Whether it's for school, an investment, or just helping out family, it can feel like you're trying to solve some super complicated puzzle, right? Well, guess what? It doesn't have to be that way. We're going to break it all down, make it super simple, and show you exactly how it works. Let's dive in. So you're all set to send some money abroad. But then the questions start popping up. How do I do this legally? Is there a limit? What can I even use the money for? These are the exact questions we're going to tackle step by step right now.
Okay, so before we get into the nitty-gritty, the dollars and cents, we have to start at square one. And square one is the single, really powerful law that governs every single rupee that moves across India's borders. It's called FEMA.
Just think of FEMA as the official rulebook, the Foreign Exchange Management Act. It's the master law for, well, everything related to foreign money in India. It's been around since the year 2000, and trust me, getting a handle on this is the most important first step.
Now, FEMA does something pretty smart to keep things from getting too confusing. It splits every single overseas transaction into just one of two buckets. I want you to picture a highway with two main lanes. One lane is for all your day-to-day stuff, and the other is for building your wealth abroad. These are what we call current and capital account transactions. So what's the big difference? It's actually really simple. A current account transaction is for spending. It doesn't really change what you own overseas. But a capital account transaction, that's for building. It's all about creating or changing your investments, your property, your assets outside of India. And knowing which lane you're in is absolutely crucial.
Let's make this super practical. What does a current account transaction look like in the real world? Well, it's the money you send for your kids' college tuition. It's the cash you use for that big vacation. It's sending a gift to a friend or helping out family members who live abroad. It's basically day-to-day life, just in another country. And then you've got the other lane, capital account transactions. This is where you're playing the long game. We're talking about buying stocks in a company like Apple or Google, purchasing an apartment somewhere else in the world, or even just opening a foreign bank account. All of these actions create a real asset for you overseas. Okay, so we've got the two types of transactions down, but how do you actually do it? How do you send the money? Well, this is where the most important tool for any Indian resident comes into play. It's called the Liberalised Remittance Scheme, or LRS, and you can just think of it as your personal express pass for moving money around the globe. And here it is, the magic number, 250,000 US dollars. Seriously, if you only remember one thing from this entire breakdown, make it this number right here. This amount is the absolute core of the whole LRS system. So what does that number actually mean for you? Well, that $250,000 limit is for every single resident Indian, and yep, that includes minors too. It resets every single financial year, which runs from April to March. And here's the really important part. It's a combined limit for everything, your spending and your investing, all bundled together. Knowing the limit is a great start, but using it the right way is what really matters. So let's get down to brass tacks. What are the absolute must-know rules you gotta follow when you send money using the LRS? Okay, rule number one, and this one is totally non-negotiable. Your PAN, your permanent account number, is mandatory. No PAN, no money transfer. It's as simple as that. The bank won't even look at it. Your PAN is basically the key that unlocks the entire LRS system for you. Now, even though it's called the Liberalized Scheme, it's not a total free-for-all. There are some hard and fast rules about what you can't do. For example, you can't use this money for any kind of gambling or for risky speculative trading, and you definitely can't send it to certain restricted countries or groups. The system is built on clear boundaries. So let's walk through how this actually plays out. The limit adds up over the year. As you can see here, you can do this in bits and pieces. Maybe you send $50,000 for tuition in April, then another $100,000 for stocks in July, and another $100,000 for property in January. But see what happens? You've now hit that $250K mark. So when you try to send that last 10 grand in March, denied. You're maxed out until the next financial year starts in April. And here's a question I get a lot. Just because the limit is stated in US dollars doesn't mean you're stuck with dollars. Nope. You can send your money in any major currency you want. Euros, British pounds, Japanese yen, you name it. The dollar amount is just the benchmark. All right, you've totally got the basics down now. So let's just touch on a couple of more specific scenarios, and then we'll wrap it all up with the key things you absolutely need to remember. This is a really cool feature called clubbing. Basically, a family can pool their individual LRS limits together to make a much larger transaction.
But there's a huge catch you need to know. If it's for an investment, like buying property, every single family member who chips in their limit must be a joint owner on paper. That's a big one.
Now, for any business owners out there, listen up. The legal structure of your business matters a lot. If you're a sole proprietor, you and your business are seen as one and the same. So you share one LRS limit. But an LLP is a totally separate legal entity, and that means the business's transactions don't eat into the personal LRS limits of the partners, which is a massive advantage. Let's quickly hit two very common situations: sending a gift or giving a loan to a relative who's an NRI. The answer is yes, you can do both, and it counts towards your LRS limit. But there are rules. The money has to go into their NRO account, and if it's a loan, it's got to be interest-free for at least a year. So, let's do a rapid-fire recap. The final checklist. FEMA, that's the master rulebook. LRS, limit your magic number, $250K a year. PAN, you can't do anything without it. Prohibited items, know what's off limits. And finally, current versus capital, know which lane you're in. Nail these 5 points, and you've pretty much nailed the entire system. And that's it. You now have the complete roadmap to legally and, more importantly, confidently send money out of India. The whole system is really designed to empower you. So the only question left to ask is, what's your next global move going to be?